Hello, welcome to RANsquawk's US opening briefing for this Easter Monday. In terms of taking a look around what's happened this weekend of both today's trading session thus far, the UK and European markets continue to be on holiday, so volumes are expected to be impeded somewhat throughout today's session. In terms of the reaction though for the Asian markets, getting their first eyes in terms of Friday's payroll data, which coming out at 162,000 was slightly shy of the consensus estimate, but did mark the highest number in around 3 years. Also as well, in terms of the boost from consensus hiring, that was quite a lot lower than anticipated, just around 40,000. So those numbers were viewed as a positive for the market, an improvement in the job situation in the US. In terms of the Asian session then, the Nikkei, that finished up at an 18-month high, 0.5% higher for the session. JGBs were lower, and T-notes in terms of the 10-year yield overnight, that did touch on just above 3.95%, the highest it's been there for a multi-month duration. And in terms of T-notes at this US Open, we're down around 2 ticks or so, so maintaining a downward move that we saw post that payroll release on Friday. US stock futures, they're trading higher territory as we're heading towards the open in Wall Street in around an hour and a half's time. In terms of some actual US news flow of note, and the Wall Street Journal article this morning getting a bit of attention, saying inflation fears cut 2 ways at the Fed. If I just refer to the article here, decisions to keep interest rates near zero and to flood the financial system with credit are sparking fears of eventual outbreak of inflation. But inside the Fed themselves, an influential band of policymakers is fretting over the opposite, that the already low rate of inflation is slowing further. So quite a lot of decisions to come in the near term from the Fed in which way they anticipate the inflation path to go going forwards. In terms of elsewhere, and what we have seen, a bit of strength in terms of the pound. That was coming after the latest UK polls indicated that the rival Conservative Party have re-widened their lead over the ruling Labour Party to again a 10-point margin. They're now on 39% of the polling votes against the 29% for that of Labour. So at the moment, the pound, as it has been reacting very positive, being pro-Tory in its moves. Looking ahead then forwards the rest of the session, we're going to be looking out for the ISM non-manufacturing number and also the latest and new pending home sales. In terms of the manufacturing number, analysts are anticipating a marginal improvement, whereas pending home sales are looked to be a slight negative and the headline month-to-month at -1%, but a stark improvement from January's poor performance. And then for fixed income, we'll be looking out for the latest in the 10-year tips auction.